of the morning, top of the morning, back at it again with another one. And today, we're looking at the Nasdaq. If you don't know, now you know. Be sure to give us a follow on Twitter. The handle is SCHMDII, SCHMDII, and we'll be posting signals, charts, and everything beyond the charts. So be sure to check us out and let's connect. Today, the price action is for the 2nd of July. New week, new goals. Second half of the year, we're about to go harder. Refine everything, and we're chasing consistency. By this time next year, Lord knows how far we'll be, but we're enjoying the process and we are submitting to time. Bullish day today, or yesterday on the Nasdaq. Also caught light of something very interesting that I want to be looking or paying attention to moving forward. It'll all make sense as we go on with the episode. So we're just gonna start here by marking out this 4-hour bullish fair value gap. Not fair value gap, sorry, order block. This bullish order block. By order block, I mean the last down close candle before price changes its state of delivery. As you can see, we're moving bearishly, and then this is the last candle of when price was moving in that X direction. And then once price closed above the open of this, we now switched to delivery, and we switched to going from bearish to bullish. So I like making a note of that opening price, as you'll see now why that was the case. So just pay attention and keep that in the back of your mind. This black line there, that's the 4-hourly fair value gap over there from yesterday, Monday. So now M4, you can see we pushed bullishly. See how we wicked at this area here? Probably random. Let's go to the M15 to take another closer surgical look. So 2nd July, zoom out. 2nd July, this is where we at now. Very random. So you opened up, right? Opened up. As we approached the New York session, we just had a bit of chop here. Lots of chop. If people were looking to trade London session, hope you didn't lose your account too much. But we got a bit of chop, a shady bit of consolidation just above. Remember that 4-hourly order block that we marked out via that thick black line? That's what that was. We had a consolidation, a building up of orders. We had buy orders to the top, sell orders to the bottom, delineated the liquidity there, and then price ran that liquidity. If people were looking to buy, they would have their stop loss orders below the consolidation, which is there. If people looked to enter a breakout sell, they would have their sell stops over there, and then their stop loss orders would be over there. And then price just has this tendency of triggering stop losses, activating stop orders or buy stops in the one direction or the other direction. Sell stops, you get what I'm saying? And then it begins to move in its actual direction, and that's what we saw. There's something I like to call the power of 3. It's a concept that I didn't author. I got it from my mentor. Shout out to ICT. And that's the personal trading model that I look to follow every day, or what I look for. So we had the chop consolidation, build up of orders. Price purged that pool of liquidity and then shot up. There was a short-term high here that we broke. Usually with the fair value gaps, we say that the price leg or the structure that taps into it shouldn't be broken for that fair value gap to remain true, which is this bearish one over here. That tapped into it. Price shouldn't have come up to tap into this, but it came back, breaking that short-term high, switching our state of delivery over to bullishness. As it pushed up after we struck that sell side liquidity, we opened up a fair value gap, and also that fair value gap line up on the fair value gap on the M15 line up with the 4-hourly order block as well. After liquidity has been swept, the main thing, or something that I have come through journaling, back testing, and observations, as well as forward testing, is that liquidity run and whatever PDRA forms after the liquidity run, you need to pay attention to that. You gotta pay attention to that. And as you can see, price came back down. I'm just gonna zoom in a bit. Notice how we didn't have any candle closures below that 4-hourly order block. Remember that thick black line? Look at the wicks. The wicks do the damage, but the bodies tell the story. That price is not willing to go below this area. Not willing to go below that area. You see, we also have an M15 order block there. Price rams into that, but it doesn't go below it. And then we begin to proceed to the upside. I'm just going to quickly throw on a projection fib on this price leg that ran the sell side liquidity. What I like to do, I like to put a projection fib there, attach it to the absolute low, drag it to the opening price of that price leg or the order block there, to get an idea of where potentially I can look to take profits. An area that I like taking profits in is that -2 to -2.5 area. That's why I'll take my first partial, and then ultimately the trade terminus will be at the -4. As you can see, we did eventually get to that -4 within the same day. Price was very bullish, and we also did manage to get up to that -2, -2.5 area, quite handsomely so. This came about quite early in the day, 8:30. Just move that to the side. 8:30. So imagine 8:30 is here. We just have these few targets here. Obviously, that will be the ultimate target, but note how that fair value gap over there also on the M15 lines up with. Ooh, network is kind of slow, so you can't see what I just drew now. Let me just make fast before it starts acting weird. An imbalance there lines up with our trade terminus area. That'll be our overall target, but the first partial will look to take it off in that area, which would be round about here. You can see they already beat us to it. Profit taking has already been occurring. That's how we saw the slight dip, and then price began or continued to proceed to the upside. This is what I meant when I said it's gonna act weird. So sorry. I'm back home. I'm not at my apartment, so I'm just tending or dealing with a poor network. But yeah, man, it means I'm dropping some serious sauce. The powers that be don't want me to share this, but guess what? We're gonna share it regardless. So you can see that imbalance over there lines up with our -4 trade terminus, which is good. Another one there lines up with our -2 and our -2.5 areas, which is good. So remember, the price leg that takes the liquidity, that's what I would use to attach my projection fib. And that low as well, that's what I would use as a stop loss, or where I'd place my stop loss. I have a number of PDRAs, this fair value gap that's lined with the the H4 order block, this M15 order block there as well, the mean point or the halfway mark of that wick, consequent encroachment, price should not trade down towards that. And then if it manages to get through all of those, at that point I'll then accept that my trade idea is invalid and I'll move to the sidelines. Simple as that. I'm just gonna check this. I'm gonna put a fib from there to there. I want to see if we aren't in the negative. We're not in the 0.6 to 0.7 area OTE. Would you look at that? From that low, that high, See we in OTE, the 0.62. That's also inside the value gap there. Price hit that, and then we began to make our way up. It's another criteria that I look for to qualify the trades, to let me know if I'm looking at a high quality setup or a low quality setup as well. And as you can see, came in quite clutch. Very powerful bullish movement to the upside. And yeah, man, I'm just gonna mark out that 10 o'clock because I look to take trades after 10 o'clock. Obviously this came a bit early. If you were at the charts at that time and it's a screamer, do best, but ideally that 10 a.m. to 11 a.m. window, that's where I look to take entries, and here we got that opportunity. Although in this instance I would anticipate, or I'd expect price to go down below to there, I would have missed this particular entry as it just briefly, pardon me, just tapped into this imbalance here before proceeding to the upside. This just goes to show how bullish price was that day, as it was in a hurry to get out of this area. And we clocked a couple points. If we're measuring from that imbalance over there, I think about 200 something. Yeah, 311. Not bad at all. Very bullish day. So key takeaways, without going into too much detail, pay attention to liquidity sweeps and the PD arrays that form after those liquidity sweeps occur. It will serve you well. I only look at one session, which is the New York AM session, as that's where I found consistency with this approach. Find what session works best for you. I would recommend you stick to one asset or one pair, but if you are able and willing to look at multiple ones, it's fine. For me personally, I like to deep dive, and the one I have chosen is the Nasdaq. Very sentimental chart. This is the chart that I first started looking at when I first properly started looking at trading back in 2020. So yeah, look out for PD arrays that form after liquidity sweeps. Look out for fair value gaps that line up with 4-hour order blocks. And above all else, submit to the process. Thank God. Stay safe and happy trading.